Welcome back, guys, to Crypto 101, the introductory series to crypto where I teach you everything that you need to know as a newbie to the world of blockchain. This video is all about Ethereum, the #2 cryptocurrency in the entire world, and the token that lives and powers Ethereum called Ether, and why it has value. For those of you who are new and don't know me, my name is Chasse. I've been in Bitcoin since 2012, right guys? That's 10 years already. A lot of my videos might be over your head for some of you, but after you watch the 101 series, I assure you that my videos will start to make more sense to you and you will learn a lot of very valuable information. So if you're not subscribed to the channel, make sure that you do already, and I hope that you enjoy and get a lot of value from these 101 videos. So you have probably by now heard the term Web3, and Web3 essentially is just the evolution of the internet, right? In Web 1.0, hardly anybody used it. It didn't have nice user interfaces. It was mostly used for research and scientists and things like that. Then we had Web 2.0, which is what you're very familiar with and probably watching this video on now. Essentially, it was a way for us to communicate and share information, right? It was all about information sharing. And Web 3.0 is all about storing and transferring value and ownership on the internet. What is Ethereum? Well, Ethereum aims to be the world computer. And by that, I would just suggest that we think about the iPhone. When the iPhone came out, we really didn't understand its utility other than it was a basic telephone that happened to have a calculator and can play MP3s. But what really makes the smartphone or the iPhone so powerful, applications have made the smartphone revolution what it is today. Now, the market cap of Apple was approximately $100 billion at the time. Today, Apple is valued at $2.2 trillion. And if you think about it, yes, Apple has had a lot of success with computers, but what is by far their most flagship item is the iPhone. And as you can see by the chart, obviously, we find a lot of values in apps, and you can see year after year, the sales of apps continues to grow and grow and grow. Ethereum also has apps, but we call them DApps or decentralized applications. All that really means is for a way to program applications to run it in a decentralized fashion. So in 2015, Ethereum went live. This was meant to be an experiment. It was meant for people to come along and see how can we build decentralized applications and have a platform to build them on and make sure that what you believe is happening is actually happening because it is all stored on the blockchain. But most importantly, it gives us a way to remove the middlemen. There's usually two end parties who are either supplying a service or a good, and the customer who's buying that service or good. But in today's world, we always have middlemen, and in most situations, way more than one. We usually have someone facilitating that process in the middle who is taking their cut. We have things like Visa and MasterCard taking their cut, our banks taking their cut. When Ethereum launched in 2015, it had a market cap of $100 million. In November 2018, the first globally accepted application was built on Ethereum called Uniswap. The launch of this app showing an application actually working on a decentralized network, Uniswap. The value of Ethereum was $12 billion, from 100 million to 12 billion. Uniswap has been an incredible success. In fact, Uniswap is a decentralized exchange similar to like Coinbase, for example, or Binance, which you might have heard of, or even the New York Stock Exchange in traditional world. Uniswap is a decentralized version of those markets without middlemen taking out their cut of the pie. So 4 years later, the current market cap of Ethereum is $142 billion, even now, today, after the crazy pullback that we saw this year. Ethereum topped out at a whopping $560 billion at the peak of the market in November 2021. And if you ask me, I believe that even at that valuation, it still has a tremendous amount of room to grow. Ethereum is quickly gaining on the market share that Apple currently has. So theoretically, one might assume that, hey, are we headed to the $2.2 trillion mark that Apple sits at currently? Or potentially, are we wrapping up every major tech company that has an application of some sort into one giant basket and saying, hey, if Ethereum becomes a dominant player for applications in the world, is that the potential market cap of what Ethereum might achieve? Now, we can even take that a step further, because unlike the app stores that, yes, the app stores might have financial services that connect you to a centralized party, like you might have your PayPal app or your Venmo app or your banking app, but you're not using the application itself to actually store the value. So where I start to get extremely bullish on something like Ethereum is, yes, we can logically say that it would start to take the market share of a lot of these other technology companies that host applications. But you can also start to imagine the disruption in the financial services. There's now applications on Ethereum that are what we classify as DeFi, decentralized finance. And unlike these other traditional Web 2.0 app stores, the value being stored is actually kept on the Ethereum network. So if I use something like PayPal or even my banking app on my phone to, let's say, take a loan out, well, I'm still actually doing business with the bank. I'm just interfacing it through my phone. It's different in Web3. Not only are you interfacing with the front end application on your phone, but actually you're also interfacing directly with the protocol that will store your value, the Ethereum blockchain itself. So we can then draw some sort of rational conclusion that, yes, Ethereum can capture market share from all the major tech companies, but also, this is where it gets really interesting, from all the finance companies. Think about the banks, any given bank, right? They make money by being middlemen. Imagine if all the profit that they make no longer goes to them, but is kept within the network itself. That starts to become a very, very powerful narrative. Let me give you an example of what I mean when I say removing the middleman and making the system more efficient. We all use Uber or Lyft or Grab or Didi, these ride-sharing apps, right? And they're created by a centralized company, and they create the software and the infrastructure. But whether you're a driver or a passenger, your experience is relatively the same on any of these apps. And in fact, you hardly ever, mostly never, interact with anyone at the corporate headquarters ever. They're very simple solutions, right? In the centralized version, let's just use Uber, for example. Let's say Uber takes 30% of the revenue generated as profit. So if I wanted to go to the airport and it would normally cost me $100 at Uber, the driver would get $70 because Uber took the $30 of their profit share. But someone can create a decentralized version of Uber, let's call it Duber, for example, and build the same kind of software. And instead of having it ran and processed on centralized servers by a centralized company that takes profit, instead they would first build the application. It would feel literally the same. So drivers can choose to put themselves online to work, and passengers can use the same way that we use everything else. But in Duber, for me to get to the airport from my house, the same thing that cost me $100 in Uber would only cost me, let's say, $80. $1 of that would be taken out, not given back to the centralized company, but it's used as incentive. So there is always a small fee, but it's kept within the network to the token holders of that system to incentivize them to run these copies of the ledger in order to make sure that the application continues to run. In this situation, the driver would get to keep $79. I am stoked as a passenger. I paid $20 less for my ride to the airport. The driver is stoked because he made $9 more, so he's happy. And the people who, in their spare time, are letting something run in the background of their computer are also earning portions of all the fees that are conducted within the application, and they're happy because they're getting passive income while they're out doing their normal life. This is a win-win for everybody. If this exists in the world, why would anybody ever use the centralized traditional systems like Uber ever again? This is the power of decentralization. This is why I'm so excited about the potential that we can create using things like Ethereum. So what is the difference between Ethereum and Ether, or as we call it, ETH, ETH? Ethereum itself is the blockchain. It is the infrastructure in which the apps get built on top of. ETH, or Ether, is the cryptocurrency that is used as essentially the fuel of the network. The way that blockchains incentivize the people who are securing the network is by giving them the transaction fees that occur on the network. And on some networks like Ethereum and Bitcoin, there is new coins that come into circulation emissions that are distributed to these people securing the networks. Ether is the currency that is used within the Ethereum blockchain, and all applications that are built on top of Ethereum need to use Ether as gas for every time they process a transaction on the blockchain. Something significant is happening very soon to Ethereum. We won't go into detail on this video, but I'm gonna tell you why it's happening based on speculative reasons. The current inflation rate of Ethereum right now, today, as it stands, is 4.3%. So that means every year, 4.3% new Ethereum come into the market, or ETH come into the market. So that means that just for the price to stay the same, we would need 4.3% more demand in the token just to keep the price the same. Ethereum will go through something called the merge. The merge is the first step in Ethereum's transition to a much more future-proof, scalable, secure type of network that we really need to get to in order for it to achieve everything that we talked about today. And the first thing that will happen is the inflation will cut down from 4.3% to just 0.43%, a 90% reduction in new ETH entering the ecosystem. So even if the demand stays constant, the new supply will be reduced by 90%. So that alone should make the price increase. This is why during this period of time, June and July, we have seen the price of ETH increase. And this is why people who don't use the Ethereum network themselves for building applications or doing anything on it also choose to hold Ether as a speculative risk asset with potentially high rewards and potentially high risk. Let me give you a little bit of context on just what kind of achievements ETH is doing. So in 2021, the Ethereum blockchain processed 12 trillion transactions. Visa, on the other hand, processed 10.4 trillion transactions. Let that sink in for a second. So even though we all know Visa very, very well, and it's one of the biggest companies in the world, Ethereum, hardly used by anybody in the real world yet, has already outpaced Visa as far as how many transactions are being processed. Now, the future for Ethereum is very bright, in my opinion, if everything goes according to plan, and that is a big if. There is a lot that Ethereum has to do to achieve in order to be something that everybody can use, because currently it has some problems. When they first built Ethereum, they didn't really anticipate it to be as popular as it is today. What happens on a network that wasn't meant to scale to the size of Visa? You have some scaling issues. And right now, the way that transactions are processed in Ethereum has a finite amount of transactions it can process per second. And right now, it's somewhere in the tune of 12 to 15 per second, which is pales in comparison to Visa and MasterCard. These numbers vary no matter where you look, but I've heard anywhere between 10 to 60,000 transactions per second. That's why Visa charges you almost nothing for transactions, while Ethereum transactions often cost anywhere from $3 to $100, or when it gets super crowded, we've seen transaction fees going for thousands of dollars on crazy NFT mints. Right now, it's just not suitable for mainstream adoption. This is causing a new phenomena, and if you subscribe to the channel, I will teach you about other blockchains that are trying to gain market share on Ethereum. You might have heard of some of these, like Cardano, Solana, Polkadot, and this is when it starts to get really fun, guys, because we have something like Ethereum that has done phenomenally well. And as a speculative asset, it's performed incredibly well. However, we're at that stage, just like in the 90s of the internet, when we don't know who's gonna be the next Amazon and Google and Facebook or Twitter, and because it wasn't back in the day, it wasn't the first movers in the internet who made it big, right? We all thought AOL was gonna dominate the space, or Netscape, or Yahoo, right? But it's not. It's not them. It's Google. It's Amazon, right? These are the big giants that came out, but they weren't the first to market. So now you understand the basics of what is Ethereum, what is Ether, and why is it being purchased by big institutions like BlackRock, Fidelity, and other major institutions, because Ethereum has the power to become the world supercomputer where all decentralized applications are built on top of. And all decentralized finance applications are built on top of, and all that value is stored in. The aggregate of all of those things create a picture for Ethereum that no company on planet Earth today can even fathom becoming that size. I believe that this space will generate somewhere in the tune of $100 trillion, which will flow from other assets into our space. And right now, guys, we had the peak of the market at an aggregate of all the cryptocurrencies at $3 trillion just at the end of last year. Then we had a big correction. Now we're around $1 trillion. So what do I expect in this space still? I personally think that we still have another 100x overall to go in the cryptocurrency space. And if you're watching this, you're still early in my opinion. Of course, you should not invest anything more than you're willing to lose. Ethereum could literally go to zero. We just don't know. The purpose of the video is not to get you to buy Ethereum or invest in it. It is simply to educate you about what Ethereum is. And then you can go out and make your own research if investing in cryptocurrency is the right thing for you or not. Guys, I plan on delivering a lot more value to you. I hope that you found value in this one. Make sure that you share with all your other friends and family who are also trying to learn about crypto. And if they're already more advanced, make sure they go check out the other videos on my channel, because I do give a lot more advanced information about other types of projects that I find incredibly interesting and valuable. So you can do some research and understand what is the best situation for yourself financially, or from an opportunity to get involved in the space. Because I also have made videos on my channel about opportunities. If you don't like your job, for example, you're wondering how can you get involved in such an exciting industry, because this industry is fun. It's actually great. All of this stuff you can find on my channel. So guys, I hope that you like this. I hope that you share with everybody. Subscribe if you're not already, and I will see you in the next one.